The Hedgeless Horseman here. It's June 26, 2024. First of all, thanks to the sponsors. So in this video I thought I would talk about my view on First Nordic Metals, which has become one of my largest shareholdings. Mainly I'm going to go through what I see as the margin of safety in this case. The focus is going to be the Barsele deposit in its current form, and basically show why I think that First Nordic is extremely undervalued, just based on what's already there, and why I think this is still one of the biggest sleeper in the gold space. Basically, we all know that the gold junior sector is in the dumpster. That's not a secret. The thing is, of course, that 95% of companies don't really have much, nor have prospects of having much. I mean, that's it. I mean, there's what, 2,000 juniors or 2,500 juniors. Most of them, I think, are gold focused, and there's a 1 million ounce deposit here and there, and there's targets and what have you. But at the end of the day, most projects will not amount to anything. So in that sense, it is really a trading sardine sector, because at the end of the day, less than 10% of gold projects will ever really get monetized, at least in the next 10 to 20 to 30 years, whatever. I'm thinking, production or a takeover or whatever. So whereas now everything is down in price, because we had a 4-year bear market, and yes, we've seen some bump in the last few months, but the trick is, which I talk about all the time, is like the due diligence, the value shuffling. When this whole sector is low, cheap, yes, you can kind of make money if you're a bit lucky with just pure trading sardines, or you buy the absolute shittiest juniors out there, lowest market caps and all of that. And if we go into a gold bull, they're gonna go up. I just really never felt comfortable owning stuff I know is crap, because it feels like it's a pure greater fools trading vehicle, and I feel like a fool basically when I hold it, because I'm an investor. I put money to become a shareholder of something that I don't really maybe think has any value, and that makes it a lot harder, in my opinion, to suffer through the volatility. And the most important thing kinda to suffer through volatility is conviction. That's kind of the go-to thing. If you are so convinced that something is undervalued, you think it's worth X, it's trading at 0.2 of X or whatever. When you have dips in prices, you're probably gonna buy more, not sell, like most people do. I mean, that's a very good indicator if you have conviction. And sometimes it might be that you have conviction, but you have too big of a position. So anything that gets you rattled really by volatility, that's a signal that you probably don't really know what you're doing, or you don't have conviction yet. That's a better way to put it, because there's no shortage of people, myself included, who bought stuff that were cheap but sold too early or got shaken out or whatever. So what I try to do, especially the more I learn about this sector, is like I like the idea of feeling like I'm owning something. I like the idea of having a big position. It's like, I actually own a small percentage of whatever asset. That is really cool to me. Especially, that's the way I view it. If I think something has value, then I get really greedy. It's like I want to own as much of this as possible, because I feel like I'm stealing value here. Most people probably have an idea what First Nordic is, but I thought I would dig into potential economics. What is the potential value here in the Barsele deposit? First, let's look at the actual deposit I'm talking about. So this is from the top, and this is only the stuff that's in the resource. So this is in the resource. Again, this resource was done in 2019, used like $1,300 gold. So this is basically what Agnico thought. All the material here, see here, the blocks. I mean, that's what Agnico thought would at least break even or make money at $1,300 gold. So I mean, that kinda should jump out at you immediately. It's like, oh, this must be a pretty robust project. Because Agnico did it, and they used very, in my opinion, conservative cost estimates. I will be using Icarin, the numbers from Icarin, their PEA, Rupert Resources project. Agnico, they're the top line, let's say. I mean, or the best of the best. They spare no expenses. They build, like Adam Segelski said, it's like they build Cadillacs. So they don't cut any corners whatsoever, let's say. I mean, if they're gonna build a project, that might be the costliest project there is, because it's gonna be whatever, state of the art, safest one there is. I mean, you obviously want stuff to be safe and all that. What I'm trying to say is that they don't build stuff cheap, and they used very high assumptions for cost, especially if you compare it to the underground mines I have looked at that Boliden runs, for example. Their cost estimates seems very high. Same goes for Björkdal, for example. They have in the last numbers I saw, they had a cutoff grade of 1 grams per ton, for example, underground. Here at least it's 1.5 or 1.8, and again this is at $1,300 gold with high cost estimates. So I mean, at least this is 50% higher already than Björkdal. And maybe, who knows? I mean, maybe Björkdal, it's are they making a lot of money at Björkdal right now? Not really, but I think this is also a much better deposit than Björkdal. My point is that's just knowing the context here, that this is an Agnico drill project, Agnico done resource. I mean, we've seen stuff happen in the sector where it's not so serious, let's say, resource estimates or whatever. It's most juniors obviously try to cut corners. They make some grand assumptions and what have you. It's this is not it. This is the best of the best that did a resource, a conservative resource, and they used a $1,300 gold price. So if they think this made money at $1,300 gold, is it a leap to say, I think this has some value at $2,300 gold? No, obviously. I mean, especially given that Sweden has some of the best underground mines in the world, and Sweden produces 60% of the world's underground mining equipment. If there's anything we know, it's underground mining, as we can see by the Boliden operations, for example. And I mean, a lot of those, including Zinkgruvan, which belongs to Lundin Mining, they're down to 1 kilometer depth. There's a bunch of deposits down to 1 kilometer or more. And they have this, the same in Finland. It's like Kittilä is down to whatever, 1.2, 1.4. I think they have reserves down to 1.4 kilometers or 1.5. And they're mining, I think it's 5 grams refractory ore underground. It's not only Sweden. It's Sweden and Finland, thanks, I think, a lot to the hydropower, etc., and the skilled labor and the mechanization of everything, yada yada. There's some, you can make really, really good mines, especially on grades that wouldn't work in probably most places in Canada. I mean, I've looked at some Canadian resource estimations for underground deposits. They have a cutoff grade of 4 grams per ton, for example. That's more than 100% higher. Meaning at 4 grams per ton, that Canadian deposit would break even at 4 grams per ton in grade. Whereas Barsele would have given the assumptions, would have 50% operating margins on 4 grams per ton. I mean, think about that. So the 4 grams per ton cutoff mine would need 8 grams for a 50% operating margin, let's say. And in Sweden here, it's like less than 4. In this case, 3 grams per ton. And again, this is a very... the assumptions are quite conservative, but that's great. Again, from I like the saying by Sun Tzu. It's like put yourself in a position where you can't lose. Then it's much easier to win, obviously. So just to have this, if we're talking margin of safety, this is really, you don't see this really. How many juniors out there have a Agnico Eagle done resource at $1,300 gold that would work at $1,300 gold, and now it's $2,300 gold. I've seen some PAs, etc. It's like their base case is $2,000 gold already with 5% discount rates, and still the economics are not out of this world, for example. So I cannot. This is legitimately a big reason. I've said this before. Like when I look at position size, typically it's the margin of safety, how risky it is, that dictates my position size. There's a bunch of stuff that could go up 10 to 20 times but from a discovery, but that might be a 5 or 10% chance of happening. If I find stuff that's like, I think the odds of this being undervalued and going up maybe several 100% is like 80% or whatever. There's I see a very slim chance that this is ever going to be worthless, and at least not worth less than what I'm paying for it in the market. Then I can go quite big, especially if I see material upside as well. So let's dig into it. So to give some background, Agnico has never put out an economic study on Barsele because they don't need to. If they have a study, that's internal. They don't need to please the market. And when Agnico did this deal with Barsele in 2015, when they started the joint venture to earn in, they had a market cap of around $4 or $5 billion. Now they have, a week or two ago, they had a market cap of 47 billion. So it's like they would need kind of 10 times as large of a project to move the needle for them today than they would in 2015. So that's a big, I think, misconception. That's a lot of people just, Agnico doesn't seem to focus on Barsele anymore. But it's kind of understandable in a sense. Even if Barsele, just the Barsele deposit grows a lot, which I think it will and could, or could and will, that's probably not a tier 1 mine anyway. A solid tier 2, but not for maybe the second largest gold miner in the world, because their threshold might be just that high, because it's mostly going to be an underground operation, Barsele. You might even be able to skip the open pit just to have an easier time doing the, let's say, ESG, whatever. And in that case, it's going to be underground, and then you're not going to have this, immense production profile. Maybe there's a choke point where it's they can produce, 150 to 170,000 ounces a year. That's not a tier 1 mine. That's not tier 1 throughput. Unless you had, 20 grams per ton or something, where it's all profit. So it's to keep it real, it's I don't see Barsele not at this, in this form at least, not in the snapshot since 2019. It's basically been frozen in time since 2019. This is not a tier 1 deposit. This is probably nothing for a $45 billion gold company. That I listened to an interview by Agnico Eagle, the Agnico Eagle boss, when he talked to Rick Rule, and he just kept saying that's we're not global. We're not a global miner, we're a regional miner. I think he said that maybe 5 times in the interview, just hammering home that They want to grow where they are, basically. And they don't have an operation in Sweden. So it goes against what the boss is saying, basically, that all our growth is going to come from the regions we're already operating. We're not going to be, branching out in the world, let's say. Of course, that could change if Barsele, or First Nordic, I should say, with the help of the 100-kilometer strike, would show that no, this is actually a legitimate gold belt. The goal line is 8 million plus gold play. Yes, then we're in I think tier 1 category, especially when you factor in the jurisdiction and operating costs and all that. But anyway, so let's jump in. They did not, again, Agnico did not put out has not put out an economic study, and they're the operators. And Barsele thus was not ever allowed to put out a economic study because Agnico has the final say. So that's why you haven't seen one. And Lord knows what happened with, like Gary Cope said in 2021, 2022, Newmont was ready to go down see the project. Maybe they see something that Agnico doesn't, or maybe they're more open to... One second. Or maybe they're more open, let's say, to branching out, because they are much more global. So, okay, with that said, I think this is one of those opportunities, because there's no economic study put out. It's been a sleeper, basically. Barsele was a sleeper. Last 4 years, I would say, not very exciting. Goldline had a good run, and then the bear market hit, and there was no money for exploration. So you have kind of, let's say, whatever, a depressed market, and these stores have been boring for quite some time. That's basically it. Nothing has really changed with the Barsele project. Still, that project alone, Barsele Minerals, with their 45% ownership, had a market cap of 200 million or something back in 2017. And not much has changed with the project since. And we're far away from 200 million, even despite the fact that gold is a lot higher and that First Nordic added a lot of ground. So that's, of course, a potential opportunity, because if nobody can just go into the First Nordic website and there's a nice new PEA and everybody can see, it's like, whoa, this is a really solid project. Whoa, this is better than whatever crapco I currently hold, for example, or hey, this is a much better project. Sure, it might be slightly higher price, but it's like given the quality, whatever, this looks real cheap. We don't have that. We can only kind of guess. And how many are actually gonna, let's say, put in the work of I don't know, actually doing a spreadsheet, like calculating, do a crude scoping study by yourself. And not a lot of people do that. I typically don't do that, because either most of the time it's a growth story I'm invested in. Then I don't feel I really need it, because like the whole point is growth, and they're not even close to a resource maybe. Or it's beta play basically, or an operating mine, but they at least have a PA, if not a producing asset. So in this case, I do think, again, it's like, given that there has been no PA put out by Agnico, and Barsele nor First Nordic really can put out a PA, so the market is obviously not really gonna appreciate it, I think, the way it should. But if we can come in, let's say, or in my case, me, if I can get a sense of what I think, how much this could be worth before a PA study is out, and I'm front running the fact that, okay, one day there's gonna be a PA study out, and everybody, it's gonna be way obvious how undervalued the company is. I obviously want to buy in before that. I want to get paid by the people that need, in that case, a PA study to really de-risk it for them. So, yeah, I guess I talked a lot already. So I have a few assumptions here. It's like I have different scenarios, different gold prices. What I would like to say is that for operating expenditures, I use the ICARI numbers. They might be 45.1, but I rounded it to 45. So I'm using the ICARI PEA numbers. And by the way, don't take these numbers to the bank. These numbers will obviously not be what exactly it's worth or what it's gonna throw off in cash flow or anything like that. This is just a crude personal estimate, and if anything, it might have some entertainment value. Otherwise, like, do your own numbers or whatever. Contact a mining engineer that can do the maybe some of this work yourself, because again, this is a crude estimate. Typically the production profile goes up and down, whatever, especially with open pits, I guess. So again, this is just a crude way of like appreciating the ballpark. What could this be worth? Obviously, as I always say, I think a no-brainer shouldn't need precision. So I mean, if I came to the conclusion that's like the market cap is 60 million, and I think Barsele, just the current version of just the Barsele deposit, is worth 100 million, it's like I would be out of here. That's not a margin of safety, really. That's just 60% upside, so that won't fly. But if we have, it's like, if I have some relatively conservative estimates that I think are conservative, and it's like, whoa, I mean, I could be 50% off and this still would make a lot of sense, it would be cheap in that case, then we're talking, then we're in like, okay, now it's probably almost no way that I'm overpaying, let's say. 1 second. Excuse me. There's no way I'm overpaying in that case. That doesn't, of course, mean that everything's gonna go smooth and I'm gonna make 5 to 10 times my money. It just means that the risk reward is extremely good, and that it should go higher, probably gonna go higher. It could go up a lot higher. Because there's no such things as guarantees. It's just lower risk and higher risk. So if I see there's low risk to the downside with material upside, that's great from a risk reward perspective. Most of the stores are high risk and high reward. But if I can find some low to medium to low risk with medium to high potential, that's like, those are the ones I can really, or typically really dig into. Simply because at the end of the day you can't compound a loss. And I've said it before, I think beta proven success is the cheapest stuff out there still, even though I have a lot of explorers. It's just the risk reward is typically very favorable right now for proven success cases. Back to my point. Okay, so OPEX, I used the ICARI's numbers. Production, I'm using 150,000 ounces per year from the Barsele deposit, and again, this is not, I wouldn't say I'm overly optimistic or anything like that. I mean, this is a solid, let's say, tier 2 production profile, if you have good margins, let's say. I mean, it's not a 400,000-500,000 ounce deposit, not in its current form at least. So mine life used 13 years, resource 25 million tons. Initial capex 350 million USD, that's like 500 CAD or something. I mean, close to that, I would say. So maybe I'm overly pessimistic, maybe. But again, we don't want to have a case make sense if you just use, like today, for example, $2,300 gold price, and we use 5% discount rate, and the cheapest cost there is, and it's like the cheapest capex or whatever, because then we can come up with any form of numbers, let's say. A good case should be a good, I mean, if something is cheap based on a conservative view, that's a very good sign, obviously, because on paper everything looks super cheap now relative where gold is. But yeah, so taxes 22% corporate tax rate, FX rate CAD to USD, and this is live updated. Sustaining capex used 300 million USD. I should put that in. This is a number. It's like just ask someone. Well, you know, whatever it was, a rule of thumb kind of. It's like you have the initial capex, and then you know, a good portion of that. So I mean, again, these numbers are not going to be 100% correct. There's no way they're 100% correct. I mean, just the FX rate changes every day. But I think I'm not, I mean, 500 million CAD, let's say, I mean, for an underground operation, I don't think that sounds, you know, optimistic at all, really. I think that's on the, maybe the pessimistic side, conservative side, and that's fine. Anyway, so, yeah, so then I simply, it's like take the 2.7 grams per ton average grade. This is the gross value. It's like how much gross gold per ton is in the rock in that case. Recoveries, I use 93% recoveries. That's around where the, you know, the preliminary, or the, you know, not the just preliminary. I think they've done quite some good testing. So I think 93 is fair. So this is how much recoverable gold, how much gold you actually get out of the rock, even though the gram might be 2.7, you might get 2.5, for example. Sustaining capex, that's simply, you know, for ongoing operations. So that's just this number here divided by 25 million tons. OPEX, $45 per ton, that I again took from Icaris PA numbers for their underground mining. So this is when you account for this, what it costs, and sustaining, you know, ongoing investments. Let's say you get $76 in pre-tax profit, assuming a gold price of $1,650. Then you get a total pre-tax value. That's for this 25 million tons. So it's basically this pre-tax profit per ton times 25 million tons. And then you divide that by 13 years. So every year there's around 146 million USD in pre-tax profits, and then you take, you know, 22% corporate tax rates, and then you're left with 114 million USD, and that would be like I thought it would be even higher, but like 156 million post-tax profits per year. That's a solid. Okay. I took this one, but I mean, yeah, it's the same principle, just, you know, divided by the CAD FX rate. And so I use a different gold price scenarios. So I thought it's like, okay. First of all, it's good to see that at 1650, with 5% discount rate, I get a, one second, P82. Oh yeah, okay, of course. So at 1650, so this is the NPV I get on the 25 million tons. That's just the resource. That's just this. That's just this, basically. Just what is proven. Just what is there and is believed to be, I mean, was used assuming a $1,300 gold price with even higher cost estimates. This is just what we get right now. This is what we're buying. This is what kind of, you know, quote is proven already. And we know, I mean, listen to Gary Cope. He says, you know, the resource is ultra conservative. Agnico used a bunch of different assumptions. Again, that's like a junior would never do. So this is very much an understated, a very, very understated resource. So this is, again, from a margin of safety perspective, that's absolutely fabulous, obviously. Because if this is a resource at much lower gold price, that works at much lower gold prices, higher operating costs, etc., that's great. Obviously, we're not overpaying for it if gold is at $2,300 gold, for example. So I already come close to a $1 billion at 1650. And that's actually what Rupert, I think. I mean, they have a very nice open pit and all that. I think they have their base case. This is kind of their base case. 1600 gold price used to mean it. So they get 1.6 billion at 1650, which is obviously superb. Superb, absolutely. But they have like what 4 million ounces or something like that included, and obviously a higher production profile because they're starting off with open pit. Still, this is very conservative, and they can afford it because it's such a good project. Let's say. So at 1650. So I want to use that. It's like, okay, because that's quite pessimistic. That's like $650 lower gold price. And I get $1 billion CAD in that case. 45% interest, which is what Barsele, First Nordic technically owns now. That's 425 million CAD in MPV belonging to First Nordic right now, based on a 1650 gold price, without any exploration potential and no exploration potential even at depth. Okay, it might be too pessimistic, so I use my base case. Obviously, if it's cheap at 1650, it's super cheap today, of course. But it's like, okay, let's do $1,800 gold, because that's kind of becoming the sector standard, I think, for PA studies and whatever. And in this case, I think I use, here I have the conservative MPV. And here I used 8% discount rate, because I've calculated 8% discount rates as well. Again, to make it a conservative. If I find it cheap, if I'm using, and I even used, higher OPEX. So I used $50 OPEX. This is kind of, because you can make a bunch of scenarios, obviously. But okay, I'm going to jack up the OPEX a bit, and I'm going to use an 8% discount rate, which is, I think that's, this is this number. So this is using 8% discount rate in Sweden. And you see juniors in Africa doing 5% discount rates. You don't see many use 8, not even the ones in like South America. So that's conservative at least. $50 OPEX, so more conservative than Ikari, and $1,800 gold, which is quite conservative because we're $500 higher than 1,800 gold, obviously. So that's a huge margin of safety. In that case, I got a 364 million in MPV belonging to First Nordic right now, which is on a fully diluted basis, because again, let's be a bit conservative. Let's not even use the basic shares outstanding, because they're right now they're being warrants exercised, and I'm exercising warrants myself. So I get more shares. Actually, I don't think I sold any First Nordic to exercise, so I'm actually increasing my share count plus half a warrant. So we want that. Okay. Then I get an upside of 375% relative to the current fully diluted market cap. That is not bad. That is not bad at all. I mean, this is what I would be happy to see in an exploration play. This is, the beauty, let's say, of margin of safety. Why I think, especially the hybrid plays right now, beta and alpha, are superior. Because the way I see this, I think this is a conservative estimate. Again, Barsele, without the gold line, and I don't know what the gold price was, reached 200 million back in 2017. The project is obviously much better today. Sweden is going more pro-mining. Then you add the exploration potential, of course. Then you add the much higher gold price. So this doesn't sound unrealistic at all. That's $1.61 per share compared to the 34 cents today. So in my book, there's 375% upside to my conservative base case. And that's just for what's already there. So it's like one could say, without any sort of catalyst whatsoever, I could argue that the share price should already be 375 million higher, or 375%. Then you can of course place like, okay, use $2,200 gold price, 5% discount rate. I call this the aggressive scenario. That's more closer to, well, what it might show up in a PEA today, let's say. And in that case, 933%. And of course, again, that's just based on what's already there. What I'm already buying. This work has been done. The drilling has been done. This is sitting there. This is gold sitting there. That I think, according to my personal conservative base case, is at least worth 375% higher than what it's worth now, aka 364 million. And you can see it's like this is, first minus 350 million USD cash flow, year 0. I used a 1 year build time. That might be actually a bit optimistic, but hey, I mean, I use some other estimates that were, I think, were kind of pessimistic, maybe even the capex, for example. And then 13 years of mine life, and then discounted that back with this case 5% rate, also 8% rate, 5% CAD rate, or NPV CAD, 5% and 8%. And here is like I have some stuff. Here you have Rupert's resource estimate assumptions, for example. This is the Björkdal underground grade, which is in operation now, a few tens of kilometers east of Barsele. They have a $1.52 underground grade, or 1.52 to 1.63. If they're making some money on that, do you think this is going to make some money given that the stopes are like 10 to 100 meters wide? Yeah, I think so. And here you have also Björkdal. Cutoff grade cost, $40 cutoff grade. So they have, costs were based on actual stoping and other costs at Björkdal Q4 2021 through Q3 2022. So these are, according to them, their actual costs. So then it would be a cutoff grade of 0.9. And I think this resource used 1.5 and 1.8. So again, goes back to, I think it's very, very much conservative. If they redid the resource today, assumed an $1,800 gold price, this would be a bigger resource. If they did a PEA, I think it would shock people. Because that's also an angle, a sleeper angle. People don't appreciate. They look at this underground grade and it's like, what do I care? Why do I care by this grade, for example? That sounds low, because they're used to Canadian operations. They're used to narrow vein mining in Canada. Look at Globex, belongs to Agnico Eagle. Low grade, makes a ton of money. Look at Kittilä. Higher grade, but I think more narrow stopes, if I had to guess, and it's refractory. Make a ton of money on that. I think Young Davidson, belonging to Alamos Gold, also a bulk underground operation, low grades. They make good money on that as well. So there's examples out there of these bulk underground operations making money. And when it comes to Sweden, we have Europe's cheapest power, basically. And we're the largest mining nation in Europe. So it's like, we're not idiots. We have some of the best underground mines in the world. Or even the open pit mines. Just look at Aitik, for example, which Boliden runs. I mean, their grades, open pit grades, are laughably low. And they make money on that. It's like, I don't know, 0.14% copper and stuff like. I mean, it's just absolutely crazy when you hear it. And they make money on it. So yeah, that's basically it. So this gives me conviction. This is why I think, I mean, the current share price of First Nordic, I think, is absolute bullshit. We have some reference point like, hey, this stock, when it only had Barsele, or, you know, the company that only had 45% of Barsele was trading at $200 million way back in 2017. Gold Line went up to $70 million market cap based on their pullback and discovery hold. They reached 70, so that's 270 million together. And the fully diluted market cap right now is 76 million CAD. And this rhymes a lot more with what Barsele was trading at alone, at much lower gold price but much better sentiment environment. So this is what I'm kind of taking to the bank. I think this is the value I'm stealing already, and I think you can just look at Kittel and Barsele, for example, or versus Barsele. This is an organic gold deposit. They've done geophysics. Agnico has done geophysics down to, well, it shows no rock change, believed rock change down to 2 kilometers. This is actually an old picture by Kittel. This is from 2013. So they had resources down to 1.4 kilometers. This is a 500 meter level. Most of Kittel is below 500 meters. And it's not believed that the rock type will change until around 2 kilometers. So do you think Barsele will grow? I mean, you can already see the hits down here, etc. Yeah, I think so. If they just double the depth, that's another Barsele. Then you get close to 5 million. That's why I think Barsele is gonna grow. I'm like 100% sure Barsele is gonna grow. It could grow a lot. Barsele only. And then, of course, we have the fact that, well, pullbacken. This is where we already hit. I mean, it's not super easy to hit. I mean, let's look at this deposit, for example. They drilled shallow blind holes at pullbacken in the form of gold line without geophysics to guide. How would it be super easy to hit Barsele with shallow holes? I mean, I think there's probably areas here where there is mineralization, it's just not been drilled, but still. I think, yeah, this is, I think, the IDA strike already, for example. So then you have, yeah, pullbacken. Then you have Brokojan, Harpsund, IDA. This is a semi-continuous multi-kilometer anomaly. IDA and they need to do more bot drilling. They've extended pullbacken, but they haven't cut it off yet. Is there a chance there might be some more gold here? Yeah, these are very large anomalies. Here you see the pullbacken. So 22.5 meters, 2.4. I mean, this sounds kind of like Barsele grades. And they've only drilled a handful of holes. 2.5 kilometers of identified corridor remains to be tested. Bedrock mineralization extends to 1.5 kilometers along IDA structural corridor. That's almost half of Barsele already, just based on what they, have tested. Could there be a multi-million ounce deposit here? I think so. Within the pullbacken project, I think there could be a couple multi-million ounce deposits, because something needs to explain all these very large anomalies. And we know there's a multi-million ounce system here because Barsele is a multi-million ounce system. Probably going to go to 4 to 5 at least, just mostly on depth actually. Then Storyuppdan. And again, there's 100 kilometers of strike. It's 100,000 hectare land package around that number. So they haven't even fine-combed everything. This is just the preliminary stuff kind, and this is obviously a huge anomaly. 5 kilometers by 1 kilometer. I mean, that footprint is larger than Barsele. If this is my base case that I think, and Taj says the same, it's like he did, they did a mine plan. He's a miner, so he built a mine plan, a scoping study kind of thing, and he thinks this is already a mine. He thinks that the current version of Barsele is already good enough, big enough to warrant this actually becoming a mine. Not just that it looks good on paper, but actually this, a legit mine, which there are not many. And of course that helps because the infrastructure is extremely good. Here you have the road, there's an airport not far off, there's rails that I think basically goes side by side with the road, there's power lines that go over the project. So it's like you couldn't, from an infrastructure perspective, you can't pick a better spot, which obviously is going to help on costs. CapEx and OpEx and skilled labor costs and what have you. And here it is Berget, which they're drilling around here now, Agnico, and up here as well. It's like, again, this is the base case I have. Why I think First Nordic is super cheap, that is just based on this. Everything else, I think I get most of this deposit for free. And I got literally, by default in that case, everything else, every other project. The district scale dream I get for free. I'm not paying for it. I'm not accepting risk at face value for it. Because I don't think any of the exploration potential is priced in, let alone the project in Finland as well. This is what I want to have. This is kind of a great risk reward to me, where I can come up with a conservative value for what is already there, risk that other people have taken, money that other people have spent, and they come up with something, and the conservative value of that, what they have come up with, is much lower than I can buy the whole company for, thus giving me free optionality on everything at depth, everything along strike, and every single other exploration target. And starting off with something that already is tangible, is a legit, let's say, mineable project. Not that they need to find, you have a good shot of them actually finding something that could be a mine, but it's like, no. I think this is already a mine. This is already tangible margin of safety in my book. That's how you get, in my opinion, great risk reward. And let's, and compare that to, I was going to say, the Finnish gold rush here, for example. Let's see here. Here, land position. Look at this, 60 kilometers. What's that? So this is around 100 kilometers, I would say, from here to here. And you have, I don't know how many juniors you have, and you have a bunch of mid-tiers and majors. So this 100-kilometer strike of the Central Lapland gold belt, at least this part of it, is enough to have several juniors and several mid-tiers and majors. First Nordic, this is a 50-kilometer scale bar. They have 100 kilometers of strike, and that's one company. And they have most of the greenstone belt. These claims here, for example, that's basically the contour of the greenstone belt. So it's not like, we have staked something. No, they actually have, I have pictures somewhere, but with the geology. Anyway, and of course, it's like you have Taj Singh, which have done it before with Discovery Silver. You have Mark Legault, 34 years experience working for Agnico. And we recently got Johannes on from EMX as well. EMX are not dummies. So if he wants to get on board here, I think that says a bit what he thinks the potential is, especially now that it's combined. Because let's face it, I wish there was a better overview. Well, I guess we can use this. No, that's actually not. Well, here. So here you have Barsele. Here's Storjuktan. This is this big one. Here you got the Harpsund, Brokojan, and Ida targets in the Powerbacken project. So, assuming you actually, if Barsele is 45 million ounces, let's say it's throttled because of the 150,000 ounces per year or 170, whatever. Okay, not a tier 1 project. What if they make a 1.5 million discovery here, 1.5 million discovery here? And let's say they, prove up 4 million at Barsele. Then you're at 30. Then you're at 7 million ounces already. Then you can start talking about, doing a bigger plant with 2 satellite deposits. Because if, let's say, the production is throttled at 150,000 ounces from Barsele because it's underground, and let's say you find and you do 2 other underground operations and ship toward to a central processing hub. Let's say you take 100,000 ounces each. Then you're all of a sudden up to 350,000 ounces, for example. That's a tier 1, and it could maybe go higher than that, I don't know. Still, then it would actually become like a tier 1, like a multi-million ounce, 7 million ounce plus, let's say, district. 1 operating hub, 1 company owns it all. It's like, do you think there could be some mid-tiers and majors interested in a picture like that in Sweden? Yeah, I sure do. And the beauty of it, again, nothing of the sort is priced in my view. So if we look at to visualize it, let's say, and that's why I don't give a shit really what happens now. It's the market is going to do what the market is going to do. It's like now there's warrant exercise being exercised, yada yada, and the mood of the day. Oh, it goes up a bit, it goes down a bit, and people think, well, I missed the boat, so I'm going to sell. I'm going to take some profits. I made 15% or whatever. I've never really been a guy like that. I want to bet big and bet high, let's say. I don't need many stores to work out for them to pay for a lot of other ones. So in my opinion, I'm like, if I'm around here trading 10 cents here or there, whatever, 5 cents, to me that's playing it small. I'm just saying what I'm doing. And of course it's kind of nice, especially now in the summer. I don't need really to think about much because if I visualize it according to my personal crude calculations, so in my mind I think this is the base case value for Barsele, just First Nordic, if they found nothing else. And that's what Taj talks about. Is there a mine here if we find nothing else? He believes there is. So, and according to me, with 8% discount rate, that's higher than Rupert or any other junior I've seen, especially in a first world country uses. But okay, so conservative, higher OPEX than Icary, and $1,800 gold price. I still get 366 million. So that's the minimum I see that Barsele is worth on paper. That's 375% higher. The aggressive case where I use $2,200 gold and 5% discount rate, that's up here. I don't know how much that would be. Let's say 927. So do I think, okay, let's put it like this. Do I think First Nordic has 10-bagger potential from this level? Absolutely. Absolutely. Because now we have a severe sector sentiment discount, plus we have a big sleeper discount because it's in Sweden. There's no PA out, specifically to First Nordic. And I even used, okay, this might be somewhat outdated. I think I did this like 2-3 weeks ago, whatever. So I took what Rupert's MPV was at 1650 according to their PA, and then I took what their market cap was as a percentage of that MPV at 1650. And then I took Barsele's 1650 MPV that I came up with using a 5% discount rate, and then I applied the same discount. So if you assume for the shitty sentiment, let's say, I think First Nordic should already, even in this crappy sentiment, because this is, of course, typically we're talking, when sentiment starts to get back. And I think this is still very much a low case scenario still. That's still 100. It should already at least be up 150%. That's my point, kind of. And of course, Rupert has some, problems of its own, I was going to say. And if we're talking, again, Rupert has 4 million ounces, okay? 4 million ounces, they have a market cap of like 800-900 million. I think Barsele is going to be 4 to 5 million ounces, at least 3 to 4 million ounces. That's what I think, at least 3 to 4, because I know this is minimum 2.4 million ounces. That's without more infill and tighter spacing or whatever, and probably the grade's going to go up in that case, so it's going to become even better actually. I think Barsele will probably rival the current version of Ikkari at some point in time in the future, assuming to Ikkari's deposit size today. And if we're talking exploration potential, I think First Nordic has higher exploration potential than Ikkari. Simply because they have like 4 kilometer to multi-kilometer anomalies already lined up. And they have a drill discovery at Påbacken. And it's like, okay, either they're really lucky at Påbacken, or that might be a quite robust system. And we also know that south of Påbacken, several kilometers to the south, there's a deposit owned by Dragon Mining called Fäbodliden. That's around 2 to 3 million ounces. So we have clear evidence of there being multi-million ounce systems on the gold line. And they have, one huge anomaly here, and they have 3 anomalies, or maybe one anomaly, if you could, or 2 kilometer anomalies, or 2.5 kilometer anomalies, or something like that. I mean, this is the 2.5 kilometers. Let's say a 2 kilometer anomaly here and a 2 kilometer anomaly there, and Ida is still wide open at currently 1.5 kilometer. We have there's evidence. We know there's multi-million ounce gold systems here. We know this is very much underexplored, and this is all under one roof. That's basically it. This is why I have First Nordic as I think it's my largest gold junior holding. Not only because I think it's so cool that it's in Sweden as well. And I've seen what Taj can do with Discovery Silver, for example. I think this share price, this market cap, this fully diluted market cap, in my opinion, is absolutely insane. And one day it's going to look very cheap. So my view is that I think there's a low chance of Barsele or First Nordic's projects ever becoming worthless. I think there's a low chance that they're not worth much more than the current market cap. I think they could also be worth a lot more than the current market cap. Only Barsele alone. If you factor in some satellite deposit, etc., I'm not ruling out that at the end of the day, with the help of better sentiment, etc., and a discovery or two, I'm not gonna rule out that First Nordic could trade at a $1 to $2 billion valuation one day. That's my bet, kinda. That's what I see. I think I probably will make a good chunk of money on First Nordic from these levels. I think so. No guarantee, but I think if I fast forward 2 years, for example, I think First Nordic will be a lot higher than it is today. And potentially materially higher. That's it. Because I don't see how this ever becomes, at face value, there's no way this is worthless. I think, again, this is minimum worth probably 365 million ounces, million CAD in a conservative case, and that's why obviously I think Agnico, has held the project for so long. I simply think it's too small. Barsele, because Agnico only has interest in the Barsele project. Everything else, Påbacken, Storjuktan, Ida, Brokojan, Harpsund, that belongs 100% to First Nordic. So I think Barsele alone is too small for a $45 billion gold company today that doesn't like to go into new jurisdictions without a really good reason. I think First Nordic could show that there's a really good reason in time when they drill the other ones. And they plan to drill, I mean, they're getting warrant money in now, so they're probably going to I mean, latest interview I watched, they talked about like, drill testing more than påbacken after the boots on the ground exploration stuff that's going to be starting soon. So I don't know when they need actually another raise, for example, because of the warrant money. They should have a few $1 million from that, and it's very cheap in Sweden. Drill costs are absurdly low. Well, I mean, some of the lowest in the industry. So yeah, I mean, to me, this is I mean, if you want to get real conviction, I think this stuff helps a lot. I think, even though of course it's going to seem very promotional, etc., at least you can follow how I came up with my numbers, even though I know they're not going to be 100% correct. But I think I've been quite conservative enough and still have implied value that is much higher than the current share price. So if you don't have conviction, if you have no idea what you think something is worth, you're probably going to be watching every tick. First Nordic is down 8%. Oh, what happened? Or it's up 8%. Should I take profits? Whatever. So you're gonna get whipsawed, and if you don't have, I mean, this kind of stuff gives conviction, in my opinion. Really conviction. It kicks in the greed, rational greed part of the brain. That's why it's like, I mean, I don't really give a shit where First Nordic is trading on any given day, because I still think it's just the market being batshit crazy, and I think it's going to show one day how crazy it was. It's like, in hindsight, there's like, I can't believe it traded that low. That's what I think is going to happen. So if you have a case, let's say, if what you see is like, my bet is that I probably am gonna, let's say, one day in the future be up somewhere, and this is not accounting for more dilution, but still. Somewhere around, the upside I see is somewhere around 375% to 900% or maybe more. And I think there's a high probability of, let's say, reaching this at least. And what's gonna, I mean, they can't undrill the deposit. That's the point. In terms of margin of safety, they can't undrill this deposit. This is already here. This is tangible value in the ground already. So it's not like, a news release comes out and all the gold went away. No. I mean, are there stuff that could happen? I'm thinking like political or whatever. Like, sure, but that's the same for. I mean, who knew that Victoria Gold was going to have a heap leach pad failure? But that's obviously an operating mine. This is not an operating mine, so there's not going to be any heap leach pads that collapse. So this is the stuff, and it's kind of on the back of my home run article, for example. I'm not saying I know for sure I'm at least going to make 375% to maybe, I mean, $1 billion would be over a 10 bagger, obviously. $2 billion would be more than a 20 bagger. I mean, from with this market cap, I mean, that's excluding dilution though. But like, no, I just, again, a no-brainer to me is like, if there's risk reward, or I should say, if there's margin of safety, it's like, I'm probably not going to lose money on this, and I can stand to make either a lot of money or a shit ton of money sometime in the future. And there's, again, a low risk that this is going to be worthless at any point in time. That's superb risk reward in my book. If this works out along the lines of what I think it could, in 2-3 years, I think this could pay for, given the position size I have, maybe it actually could multiply my entire portfolio. That's assuming if I actually held on to every single share. I don't know if I'm going to be that brave. But yeah, to me, I am not. I'm, the earliest shares I bought in First Nordic, they am up at or up in, I guess. But I've been pretty much averaging up all the way. I started buying, I think, again around here. I owned Gold Line before. I owned Barsele as well. I was down on most of them. But I started averaging down, and now I've been kind of averaging up. I don't know many cases like this. That's it. That's the thing. I don't know many cases like this. Yes, I know there's 1 to 2 to 3 million ounce deposits out there, but they tend to be pretty crappy. Or, there's an even larger one, but it's way out in the middle of nowhere. So it's like, I don't even know, what they need for that to be. And I'm not talking about Snowline because that's a world-class deposit. But still, I mean, Snowline is, 60 kilometers from, or 40 kilometers from the nearest road or something. So, I mean, that's hurdles as well. The ore body is absolutely world-class. But from a development standpoint, I don't know when that's going to get developed, if you know what I mean. But the more they find, the better it gets, of course. But here we're talking extremely, extremely good infrastructure. Yes, ridiculously good infrastructure. Dragon Mining put a deposit into production that had 400,000 ounces. That's 5 kilometers west of Påbacken. So the threshold for success here is extremely low. In some parts of Canada, maybe depending on the project, there's like, you need 4 million ounces for anybody to really care. I mean, the Donlin Creek deposit, that's like 20 million ounces, and that's still sitting there. I mean, there's probably a bunch of other stuff. But yeah, so it's like, I don't know many cases like this. Yes, I know there's, some Canadian plays that have, ounces in the ground or whatever, and it's like, they don't have a resource maybe yet, but, they probably are gonna have a resource, but it, kind of takes time, especially if it's a load gold system, because it costs a lot to drill, because it's drill intensive, and there in many places the drill costs are high. Here the drill costs are low, cheap, and this is, especially Barsele, is a very beefy system, so you don't need that much drilling to throw up quite a bit of ounces. And if you can drill that cheap as well, it's like, yeah, it's hard to beat. And I mean, how many Canadian juniors with, let's say, a multi-million ounce deposit have 100 kilometers of strike, for example? If they have, again, it's probably in a very remote greenstone belt. You're not going to have 100 kilometers strike in a junior on the, whatever, the Cadillac larder break, for example. No, there's a shit ton of juniors and companies sharing that. But those are, more developed and all that. This is a 100 kilometer strike with excellent, especially at Barsele, extremely good infrastructure, almost free power in Sweden. That's it. I mean, correct me if I'm wrong. If someone knows a story with this much going for it, and again has, an entire district to explore as well, can drill cheap, some of the lowest cost underground mines in the area, etc. No, I don't think you can. I don't think you're gonna find it. And you're starting off with an Agnico drill resource. So that's, I don't worry too much about it. So this is, in my opinion, this price is ridiculous. So I don't have much to do until it's like, let Tosh tell the story and the company get to work showing just how undervalued it is. Then of course I hope something happens with Agnico down the line. Because if we had operatorship and we could put out a PA and stuff, yeah, things would get really fun really quick, I think. Anyway, long video. I'm biased, of course, very biased. I own a lot of shares of First Nordic. It's in Sweden also, which I think is so cool. So it probably makes me have an even bigger position. And yeah, I mean, everything I said basically is, highly speculative, forward-looking. Don't take anything to the bank. Do your own due diligence. Don't make any investment decision just based on what I've said. If you don't, never invest any money where you don't see the case. Because if not, you're not going to have conviction. You're not going to have conviction. You have no idea what you want to see. You have no idea, let's say, when you should take profits. You won't be able to buy the dips. You're probably going to chase the stock and sell if it dips instead, yada yada. So a bunch of messy stuff happens when you don't have personal conviction. And that's I think the main thing. It's like even when there's like people that I think are really good at investing, just because they like a company, I will never invest, at least with any meaningful position, unless I understand the case. Otherwise, I'm gonna find something else the next day, and it's like, oh, I'm gonna sell the one I didn't have conviction in. I know how that movie plays out. So you need conviction, and in that case, you need to understand it. You need to see it yourself. Again, not investing advice. I'm biased. I don't share your profits or your losses. You know, all of that. So I mean, I'm talking my book here. Obviously, it's like I only talk about companies I like that I own. So I'm talking my book. I just want to make sure. It's like I'm not guaranteeing that I'll make any money or anyone else will make money on First Nordic. My bet is simply, I think I'm going to make money on First Nordic from here. I think I could make a lot of money. That's the bet. There's no guarantees. If there was an absolute guarantee, I would be 100% all in. I'm not. So yeah, thanks for listening. Bye.